Okay, can you see my screen? Can you see my
Yes, I can see
screen?
your screen. I can see your
Okay, no
screen.
problem. No problem. Okay, so you're welcome back, and today we'll be looking at internal and external range liquidity. So today we'll be looking at the external range and internal range liquidity, and we'll be starting from we're starting from. So now this is my chart. Now remember what we've said in the past about liquidity, that liquidity is the originator of price movement. Liquidity is the originator of price movement. Now, which means that what really moves, what allows the market to move, is the liquidity. So when we don't have a liquidity, we don't have a sense of direction. Okay. Okay. I'm sorry. So we said that liquidity is the originator of price movement, and what we'll be talking about is that we'll be looking at the different kind of liquidity that we can see. And initially we had the buy side and the sell side liquidity, and it has not changed. It has not changed. So we have our buy side, we have our sell side. So all these ones has not changed. All we are just looking at is that we are just looking at a different variety of that same liquidity. So there are times that you will see liquidity in external, and you will see liquidity in the what's the word now? You see liquidity on the buy side and the sell side. Yeah, have this one that it has not changed. Number one is that when the market takes out the sell side, when the market takes out the buy side, it's still the same thing. When the market takes out the buy side, it's going to the sell side. So it is still the same thing. Nothing has actually changed about that. So now having that at the back of our mind, now we can look at the chart and explain what we can see accurately about liquidity. So now today we have the internal and the external range liquidity. So what are the internal range liquidity and what are the external range liquidity? Now I want you to start writing. Number one, internal range liquidity are fair value gaps, order blocks, breaker blocks, inverse fair value gap. Internal range liquidity are the order blocks, fair value gap, inverse fair value gap, breaker block. Now, why the external liquidity are the previous highs and lows? Just those two, the previous highs and low. Number one, what we have is the external range, internal range. Now, inside the internal and external range, we now have internal range. The internal range had the fair value gap, the order block, the inverse fair value gap, and what else? And breaker block. Okay. Now, why external range are the previous high and the previous low? So now let me explain. Now let's assume that you're opening your chart for the first time, and this is what you have. This is what you have. This is what you have. Opening your chart for the first time, and this is what you have. Now remember, I said the external range is the previous high or low. So this is a high. This is a previous high. Now, which means that when the market breaks the previous high, it will surely come for the internal range here. Now, inside this particular impulsive movement, we can have either the other block, fair value gap, so the other block, fair value gap, or breaker block, or inverse fair value gap. So we can have all of these things. Now, how to now read it is that market trades from liquidity to liquidity. So when the market breaks the external range, it will definitely come for the internal range. It will definitely come for the internal range. It will definitely come for the internal range. So when it enters the internal range, definitely it's going back to the external range again. It's going back to the external range again. So, and when you observe this, you know that liquidity has been read, the external range liquidity has been raided. The market has taken out the external range again. What are we expecting? We're waiting for the market to come back to the internal range again. So then we expand like that. So now this is what I have. Now let me show you how it looks like on the chart. Let me delete it. No, let me explain first. Now the market, when it takes out the external range, it will definitely come for the internal range. When it takes out the external range, it's going to come for the internal range again. When it takes out the external range, it surely come for the internal range again. Now, having said this, then we have this. This is the chart. This is the live chart. And this is a monthly time frame. Monthly. Now pay attention to how I'm blending my time frame right now. Pay attention to it. So now this is this point. This is a chart. And now when you observe very well, the market has taken out the external range. This is the external range. The market has done what? Has taken it out. So we mark it. We mark it. Since the market has taken out the external range. Now the next thing we'll be anticipating for is the market to come for the internal range. The internal range. And I said that the internal range can either be the fair value gap, other block, breaker block, inverse fair value gap. So for the purpose of today's class, I will talk about fair value gap, and I will mix it with the concept of internal and external range liquidity. So the question is, what is fair value gap? Now, fair value gap is when you have a a three candle following each other, like the same three candle, like look at this candle now. This is bullish candle. Now, one, two, three. Now, when you have three candles like this, and none of them overlap themselves, by the time you mark the lows and the high, now this is what I mean. When you mark this, when you mark this, when you mark this, and you mark this, and you mark this, you found out that there was a space in between. Whenever there is a three candle following each other, three similar candle following each other, and the second candle has a gap in between it, it's called a fair value. And whenever you see a fair value, the market will definitely come and retest that point. It will surely come for it. The market will definitely come for it. It will do what? It will definitely come for it. So now whenever you open your chart, you start from your monthly time frame first. So when you get to your monthly time frame, you mark the recent high and the recent low. This is the recent low, one. This is the recent high. So recent low, recent high. And when you observe very well, remember what I said is that the market has taken out this external range liquidity. Definitely is coming for one of the internal range liquidity. And one of the internal range liquidity that we have is this fair value gap. Remember what we said? We said fair value gap is when we have three candles following themselves, the same candle following each other, and we can see a gap at the second candle, and this is the gap. So which implies to us that after this external range has been taken, the market is definitely coming for this internal range, which is the fair value gap. Then, having marked the monthly time frame, you already know that now, this current month that we are in, the market is about to start selling. Why? Because it's retracing to the internal range. Then so what do we do on our weekly time frame? This is monthly, then we shift to our weekly time frame. So this is our weekly time frame. Now our attention will be on where? Will be on the recent high and the recent low. Now, and if you pay attention very well, we already marked this one from the monthly time frame, and we can see this fair value gap. The gap is there, which means that we are expecting the market to come and tap into this gap. Now, this is our weekly. So we want to pay attention to the weekly highs and the weekly low. So let's mark it. So we have this weekly high and we have this weekly low. This is it, the weekly high, the weekly low. And if you are going to observe very well, we don't know. I don't know how to use the word now. We don't know, maybe the external range has been taken here. But let's use daily so we can see it. Okay, okay, okay. So now on our daily time frame, we had this recent high that was rated. This recent high was rated. Let me mark it. This recent high was rated. And remember, when AI is rated, it shows that the sell side liquidity has been taken out. This is the sell side liquidity that was rated. And market trade from liquidity to liquidity, right? It trades from liquidity to liquidity. So this is the buy side rated, and the market is coming for the sell side. Now, which means that Euro USD is going to sell. Now, let's move to 4 hours. Now, on our 4 hours time frame, let's observe it very well so we can see it more clearer. Now, you can see it here, liquidity rated, liquidity rated. So which is the buy side rated, and this is the sell side. And this sell side is actually at the external range liquidity. And this particular market has mitigated the other block here. I will explain other block. But today I want you to focus on fair value gap. So now we had the break of structure here. We had this normal break of structure here. So which means that now on our Euro USD we are selling like a serious sell. Now remember, this liquidity has been taken. This liquidity, this buy side has been raided. So when the buy side has been raided, the market will definitely come for the sell side. Now let's look at this particular point and see what we can do. This is 4 hours. Let's go to 1 hour. So here's our 1 hour time frame. We had the break of structure. The market tap into this order block. I will explain how order blocks, but today I don't want to explain order block today because we'll be dwelling very, very well on internal range and external range this period, and we will definitely check all of the PDRAs, all of the other blocks, the fair value gap. But today I want you to focus on fair value gap today. So now this is 1 hour time frame. So the market has broken structure, created a retracement, and it has been selling. Now, when we observe this very well, we knew that the market is going to sell for a long while. It's not buying. It's not buying at all. Now, there are things that we have to pay attention to. Now, this is our 1 hour time frame. We saw this liquidity being raided. Let's go to 30 minutes time frame. Now, we saw this liquidity being raided. But now, if you observe it very well, it is something that we need to draw our attention towards. Now, I don't know, maybe I've explained this to you before, but I knew I did that. There was a break of structure here. A break of structure. And we have a pullback here. A pullback, and this pullback is definitely a buy side liquidity. So let's check 15 minutes. Let's check 15 minutes. So when we look at this particular movement, we found out that we had the break of structure and the market retraced back. Then the market has been selling. It has been selling. So it has been selling, like selling very, very hard. So let's go back to 4 hours. Now, knowing fully well that buy side raided, we had a structure break here, and we know that the market is definitely coming for the sell side. So now, one thing I will suggest to you is that always wait for a break of market structure on a 1 hour or 4 hours. Now, why? The reason is because it gives you a valid structure. It gives you a valid structure. And now, if you look at this 1 hour very well, we had this break of structure. The market retraced back into heat. Then we had a fresh break of structure. And the market retraced back into heat. We had a fresh break of structure and the market retraced back into it. So now, what I'm trying to say is that make sure that you get your break of structure on a 1 hour time frame for a good confluence. Now, when you observe this very well, the same thing applicable here. There's a break of structure here, where they pull back and the market enter into the order block. Now, which means that now let me introduce the concept of liquidity, external and internal range here. Now this is it. We had this external range that was rated. External range was rated here. You can see it. It was rated. So when the external range was rated, now the next thing that should happen is the market retracing back to the internal range. And the internal range that we have here is order block actually, not fair value gap. But I've said that I'm not going to dwell on order block. And the reason is because I want it to be step by step. So now, when you observe it very well, the liquidity we had here, I'm sorry, the kind of liquidity we had is the internal range. So the market came to mitigate the internal range, then come for the external range again. But during the course, a buy side was raided, and the market goes to the downside. So now, what we should be waiting for again is a kind of break of structure again, like a break of structure again. Then after the break of structure, we wait for a pullback, then we enter again. So now, this is Euro USD. Let's check GBP USD. GBP USD. Let's go to our monthly time frame. So now, when you look at this, let's check our recent highs and low. Our recent highs and low. So particular, we had this particular high, and we had this particular low. And when you check very well, we had a clear break of structure. Sorry, an external ring that was rated. An external ring that was rated. External range was rated. So that was when we begin to have this particular bullish movement that is about to clear this eye. It's about to clear this eye. It's about to clear it. So when it clears this eye, we know that the narrative has started changing. Why? The reason is because the external range would have been taken clearly. Then we now wait for a market to retrace back. So now let's check how that bullish movement started. Let's check how it started. So let's go to weekly. So we start like this. We start like this. So we had the markets preparing to the upside, and we had this fair value gap here. You can see the gap here. There was a gap. There's a little gap here. Not extremely obvious, but there was a fair value gap here. One. So the market taps into the fair value gap. So market tapped into the fair value gap, and since then it's been going up. Now, if you see this again, we had a fair value gap also here. We had a fair value gap also here. And the market tapped into the fair value gap. The market taps into the fair value gap. Then remember, internal to external. Now this was the external range. This was the external range. So we had this internal range, which is the fair value gap, and the market taps into the fair value gap. Then the market pushed to the external range again. So inside the external range, then we had another fair value gap, and which is this. So at this point, So now when the market taps into the internal range here, then we are planning for the market to come for this external range. This external range on our weekly. So now GBP USD is going to be bullish. Why? The market that taps into the internal range definitely is coming for the external range. Now, having said this, we move to our daily. So this is our daily. These are daily, and the market is ranging seriously here. But there's things that we can see. So let's go to flowers. Let's go to flowers. So now, so the market is it has tapped into this particular point and is going up. But anything due to now, let's go to our monthly time frame. I'm seeing something that look like a full rejection. Now, I don't know because this thing is not looking as if that the external range has been taken properly. Oh, it has been taken. Oh, it has been taken. This eye has read this external range. It has been raided. So it's planning to sell. It's planning to sell because the external range has been taken. So the market is definitely coming to the downside. Why? We know as time goes on. Now let me go back to my daily. Let me go back to my daily and see what I can do. Now let me delete this. So on our daily time frame, liquidity. Here is a liquidity. Buy side being raided. And it's coming for this external range liquidity. Or at this point is a sell side, but this is a sell side point. Then let's go to 4 hours. Now, very clear. Liquidity. So we had this liquidity and the market is planning to do something. And one thing I observe is that we had a break of structure, break of structure. Now let's go to 1 hour. We had a break of structure. Now the market enters the fair value gap. Market enters the fair value gap. So let's go to 1 hour. So we had this market, and one thing about it is that we are yet to see a clear break of structure here. It's looking like a range, but we will accurately wait. See when there's a break of structure, then we mark it and look for what we can do around it. So the market is preparing to sell, to take out all of this sell side. Take out all of this sell side. Why? It has taken out this buy side. It has broken structure. It has entered this internal range. Then it's coming for this external range. Then going like that. So let's check AUD. AUD. Now, this is our AUD on a monthly time frame perspective. On a monthly time frame perspective. Now, this is all we have. One thing is that we mark the recent high. Recent high. Recently. So, and one thing is that the market has taken out the external range in which is coming for the internal range. Now, the internal range, this region is for order block, but this region is for a breaker block. So we can have it at this order block. We can see the market retracing back and going to this upside, then start coming down, or it maintains this breaker block level. I will explain it as time goes on. Just you just try to sieve it off for now. So now this is our weekly. On our weekly time frame, we can see this liquidity being rated. This liquidity being rated, and the market mitigating this particular order block on a weekly time frame. Now, which implies to us that we are about to see an aggressive sell, because why? The sell side has been raided and the market is coming. The buy side has been raided. The market is coming for this sell side. So let's go to daily. So on our daily time frame, I saw many things, and which indicates to me that actually we are set to start. This particular movement is set to start going down. Now we had a break of structure here. We saw liquidity being raided. We saw a retracement at this other block. And remember, I said other block is part of the internal range. So it has mitigated the internal range. Definitely, it's coming for this external range. This external range. Then let's go to 4 hours. Now on our 4 hours time frame, we can accurately see liquidity here being cleared away. But now here's a break of structure. Let me make it so clear. This is it. Here's a break of structure. So the market mitigates this level, and since then it's sold at the other block. Now let me just explain that block. Other block can be bullish or bearish. Fair value gap can also be bullish or bearish. But other block is when we have a green candle. A bearish order block is for a selling position, a selling order. So we can have a green candle being engulfed by a red candle, a green candle being engulfed by a red candle. And during that course of the engulfment, we had a break of structure. It validates that this order block is a valid one. So order block is when a green candle is being engulfed by the red candle. That is for bearish. But if it is for bullish order block is when a red candle is being engulfed by a green candle and there is a break of structure. So just keep it there. Just keep it there. Don't stress yourself. Just keep it there. So after we had this particular movement in the other block to this downside, it has been coming to this downside. Then I saw a fair value gap here. Here's the fair value gap. One. So the market taps after this aggressive movement. Remember, after it has broken this external range, definitely the market does not just move anyhow. It does not just move on a straight line. There's always a need for it to try and retrace. And you can see it after it has taken this external range, it retraced back into this internal range, which is the fair value gap, a bearish fair value gap. You can see one candle, second candle, third candle, and you can see they did not overlap themselves. There is a gap in between, and this gap will always be retested, and the market came back to retest it again, then start going down. And we know where it's going to sell. So imagine it that you don't have you don't have all of this happened, but you have this. So very simple. There was a liquidity sweep here. There was a sweep, a sell side being raided, a buy side being raided, a break of structure. You have all of this, all of this. All you just have to do is to wait. Put your sell limit here, your sell entry here. and market came to mitigate it, and since then it has been going down. It has been going aggressively down. So let's check 1 hour. So after let me after this particular market has retraced a bit, then I saw something that we can still use to pick a trade. Then I saw a break of market structure, a retracement for a sell. That's a break of market structure, a retracement for a sell, and it has been going down. It has been going down. Then after that, we had another break of structure. Had another break of structure. Let's check. Another break of structure. The market retraced back into the other block. Into the other block. And since then, it has been selling. It has been selling. So now this is it. With this our buyers, we know fully well that this market is going to sell for a long while. But let's just stay on the fence and start looking at how it forms. So when it forms, my own is to signal to you that, yeah, go and mark the structure and let's see. So all we'll be doing is that we'll be looking for a selling opportunity because the market movement is bearish. So we'll be looking for a selling opportunity, a selling structure. So let's check one up here. Let's check one up here. So this is USDJPY. USDJPY. Now, USDJPY is US dollar and Japanese yen. And now, yeah, this US dollar and Japanese yen, we want to look at what is happening with it. Let's look at what is happening with it. Nígbà kó máa bọ̀ nílé o, ìyá kò pè dé báyọ̀ kò confirm. So we have this. This is monthly time frame. So now monthly time frame we mark our recent high, recent low. Now, inside this particular movement, we had this fair value gap. We had this fair value gap. This fair value gap. This fair value gap. And it's looking like the market is about to respect it. Let's see how it closes below it. So it's planning to respect it. If it can, it has been retested already. It has been retested already. This is it. It has been retested already. So since the internal range has been, this is high. This is the internal range, the fair value gap, and this is the external range. So we're waiting for the market to tap into the internal range. And let's go to weekly time frame. So on our weekly time frame, this is what we have. So we have this particular high. You can see recent high, recent low. So, and the market has tapped into this. It has tapped into this particular internal range. So we're expecting to come for this external range. Then let's go to daily. So on our daily time frame, we can see liquidity being raided. liquidity being raided. So this liquidity has been raided. Definitely, we are coming for this sell side, buy side raided. We are coming for this sell side. Then let's go to 4 hours time frame. So on our 4 hours time frame, let me use 1 hour instead. I said that you can mark your structure from 4 hours and on like that. So we had this break of structure. We had this break of structure. The market reacted towards it at the other block. You can see the other block. You can see the other block. This is it. You can see this particular green candle being engulfed by a red candle. It means that there's a footprint of the seller in the market, which means that the market is going to come back and retest. Then after that, we had another break of structure. We had this break of structure. That is break of structure. Then we are expecting the market. This is what I suggest. I expect the market to come and take out this liquidity. So if you can take it out, then it's going to start selling from here. It's going to start selling from here. Okay. So do you have a question?
Do you
have a question?
Yes, not yet. I was not able to concentrate fully on everything. I missed out some parts of my boss actually to help me get something. But I would have to rewatch, and then if I have questions, I would come to your DM and WhatsApp to ask you. Is that okay with you? Hello, can you hear me? Hello. You have any questions? Oh, I want to get you now. No. Give me water. How would you do that? I don't understand. Don't let definitely. Will you give me food? So you talk about what you are giving shit. Will you give me food after? Give you what? Food. It's not I have for me. Give me food now. Yeah, that don't. Yeah, that don't. Is it the only one for now? Yes.
Can you hear me?
Yes, I can hear you. I
Okay.
was saying that I have to watch the video to
You said
there's some things I missed out. on. So my question
Okay.
is probably there are
Okay.
some things I restarted. So my questions will not be properly articulated now. I will ask you to watch the recording, and then
Okay.
if I have any questions, I will send them to you.
Okay. Okay. No problem. So when you watch the video again, when you watch the video again, then I will now give you the work to do. Then we will come back tomorrow. Do you understand me?
Yes, I understand. Thank you.
Okay. Okay.